Yeah, it's over. Good morning, everyone. How you guys doing? Just play intros and get some rest. I can't miss the pre-Opex stream, right? Feeling a little bit better. Fever's starting to break down, but now everything else is like thickening. So everything in my, it's just, I'm thick. I've become thick in a not good way. Cameron, that's our 2 hours. I'll see you tomorrow. Yeah. Learning about Wyckoff volume spread analysis. Very interesting. Do you use that often? I use it on occasion. I'm feeling pretty good. Thanks, Sugar Tits. Can you put to bed all the BBBY hopium going on in the Reddit threads? No? How? It's baseless speculation. There's no way to put it to bed. That's why it's such an effective tactic for those who wish to hold on to their bags very tightly. There's a There's like a psychological thing that goes on with traders where when they lose lots of unrealized gains, they can't let go, right? Like they have to hold forever in the hopes that they'll see that again. Um and if anything, it's something that's become even more pervasive with the advent of meme stocks. Thanks, RC Tetris. Is baseless speculation enough for another pop? I wish. We need to quit that. Yeah, people really do. But most of it comes from inexperience and not realizing that shit like that happens in the market every day. Oh, there was nothing else to that. Thank you so much, Dan. I appreciate that, man. Selling deep in the money CSP and Opex to capture volatility. Deep out of the money? He was saying CCs, definitely not CSPs. Maybe CSPs like before, like the early part of the week before it runs up. You want to sell in the money CSPs and get assigned, regardless of the volatility. You'd want to sell CCs or naked calls. Opium aside, isn't it possible to play another bounce on Bobby? Um, yeah. I don't think the timing's right. It is OPEX, right? So, without that overhead suppression from the put walls, it's possible that it could pop for OPEX. Like I'll probably buy a couple calls tomorrow and see what happens, right? It also might give me a nice opportunity to offload my $5 leaps, which I did hold on to. Did you receive your ape dividend? I sold all my AMC, like those Cash App AMC shares I had. I sold those like 2 weeks ago. Hey Greg, with the IV on Rebecca being so high, would it be better to look at the $10 strike for Jan 2023 and think of it more like a delta play instead of Jan 2023 35C? Sure. I mean, the potential extrinsic value in the Jan 35s is higher though. Remember that once it's like 1.0 delta, it'll just be worth the same as the underlying stock. You'll still get leverage, right? But less extrinsic value. So, the 35C will be worth, and would, if it hit 35, would be worth a fortune compared to a 10C if it hit 35. A 10C at 35 would be about $35. So someone asked me a question before the stream, and I kind of wanted to try to answer that really quickly before I get into the like the stream questions. It's kind of about so Friday, some of you may have noticed that I picked out some calls for GME and I bought into them. And the stock traded relatively flat for most of the day. But the price and value of the calls that I bought went up like 50 to 100%. There's kind of a trick to and this isn't going to make sense for a lot of you because I know most of you aren't going to understand Black-Scholes. But using Hardy decomposition, which you can look up, it's called Hardy decomposition. You can kind of estimate Black-Scholes as like option price equals intrinsic plus at the money price times Hardy factor as like an easier way of estimating Black-Scholes in your head. You end up with like you end up with a total that's like 0.4 of a standard deviation outside of the standard pricing model. But if you can quickly factor in that 0.4, this makes it far easier to like estimate those prices in your head. So yeah, or just use an options calculator. I took my 196% gains on Bobby. May get back in. Who knows? Fair enough. I sold all my Bobby position on the way up at 12, but even I think there's more to this situation. That's fair. It's fine to think there's more to the situation. My argument is not against bullishness on Bobby. My argument is against holding bags on Bobby and making up fake bullish shit in order to justify the holding of those bags. Have you ever considered a septumplasty? I didn't. I never got sick since. No? I don't think I don't think I need one. No. I haven't done that much cocaine yet. Yeah, he would have had to have sold his position. Sure. Morant's Rants is a fucking idiot, though, so take that into account. Is there a bear case for Revlon? Yeah, it's bankrupt and it might be delisted in October. Gen 35Cs are a delta play when they go in the money. I mean, they're already a delta play. The Gen 35Cs are 0.36 delta as of close Friday, I believe. Or just copy what you do. Okay, yeah. All right, fair enough. Sticking to mind the Europors who couldn't sell in after hours. Yeah, they got smoked the hardest. Remember, if you have IBKR and you're in Europe, you can sell in after hours. But do we want to keep our low-priced BBBY leaps through the beginning of September in case there's an announcement of some sort? Sure, you know, if you're up significantly on them, if you were buying them under like $5, right, and you're up a lot, awesome, right? You have a lot of flexibility in your position. That's not true for everyone, right? I would say it's not true for most. Allows volatility to be flexible instead of assuming it's constant. Yeah. %80 of the population has a deviation in the septum. I made it 81% when I started boxing. Huh. Had my first 2,000% ever on BBY options. Thanks for all, Girk. Worth still having some small exposure just in case? Sure, yeah. I mean, if you're out and you want to try to pick up some exposure on the crush, you know, it's found a pretty stable floor at $10. If that holds, you know, it's very easy to reposition. There's no rush, right? Like, you don't need to hold your bags into it. My biggest problem is there are a lot of people sitting on like, you know, $40 calls for September talking about some like bullish shit happening, so they have an excuse to hold on to their negative 90% options when the reality is they should have sold them when they were negative 50%. But I feel that Rev is in the same situation as VW or Disney when they were about to die before turning the tables. They very well could be. They may have already started turning the tables, right? They just got uh, a loan for 3 times their market cap. And they make money. They make like 300 million a quarter. It gets chewed up by all their debt, but they do make money. They're not an unsuccessful company. I have the black and white on, so I don't have to have the light in front of me turned on. So on black and white, I only have to turn on one light, and you guys can see me just fine. But if I have it on color, I have to turn on all 3. And Hellboy owns 90%, 84%, but yeah. You think Rev could pull back to 6 or 7 after Opex? my biggest question is what's Rev gonna do for Opex? Right? Could get pretty fucking spicy. You had a sub $8 entry on Friday. Another? You want another one? Didn't it? Yeah, I feel like Friday it pulled back already, Claw. Didn't it pull back? It pulled back to like 788. You're targeting 750. That might be a little harder. This break is kind of bullish. I don't know if it's like broken out yet, but it's yeah, it kind of broke out already. Even if you ignore this, I mean, maybe not till after it's done running. It took a while, but I was confusing Fubu, the Shark Tank Damon guy's clothing company, with Fubo, the sporting events streaming TV company. I see. Yeah, markets are closed. It's Sunday. I have a clip on the Rev thesis. I mean, there's more to it, obviously, than the like 5-second clip, but there is a clip. It's on the clips channel. Just look up like Rev, REV, and you should be able to find it. If Perelman alone or in combo with middleman by 100%, what happens to the price? It goes up. It's like a VW, right? What are the factors of Opex that cause positive price movement afterwards? Well, one of them is gamma exposure. The other is the cash settlement of ETF obligations. So you have gamma exposure as gamma approaches expiration, it becomes harder and harder to hedge, right? And so you get a lot of overflow from the gamma exposure on the market maker's hedge. So that huge expiration date, that flows over, and market makers have to cover gamma exposure simultaneously. You get cash settlement of ETF obligations. You usually due to creation over the prior period. When I first got into investing, I was thinking of companies that have strong sales and good futures. Now I'm in bankrupt companies with loans. This is the way. Let's fucking go. I have a bunch of Rev Jan 25C. Would I be better off repositioning those to 35? Probably not anymore. Especially if you have those at a cheaper price than the current one. Well, so anytime we have an Opex, I didn't know they were gonna mark it up, right? I'm not a fucking prophet, but when we do have Opex, and the days prior to Opex, either Thursday or Friday, market makers will mark up IV about 20%. This is a really good signal that we're gonna have some kind of run this week. So they crush IV, obviously, going into Opex. But then that markup at the end of the week, which prices a lot of people out of calls for waiting too long, right? Everyone's always so eager to enter Opex at the perfect period because of this exact mechanic. And so, yeah, I mean, like, I was betting on them marking it up, but I didn't know if they were going to or not. Like, going into June, we saw a markup in IV, but it was minimal. We actually saw a move up in price. And then May, nothing. There was no markup in IV, right? So it doesn't happen every time. But in like March it did. IV went up significantly and ahead of the March run. I mean, a week ago, someone could have said that like this was in like a descending wedge. Um it would have been well, kind of still is. But it's broken out one way or the other. If Rev goes nuts over 30, how high could the IV spike? Oh, I mean, IV has a theoretical, it doesn't have like a theoretical like upside limit. It's just, it's infinite. I bought more IV plays and they were 90 cents per contract. They've been up for weeks. I just want an idea of how much higher they could spike. um, so like, I guess I could use GME's squeeze as an example. IV on those contracts hit it's like 6,000% or something like that, like the intraday, but like the far out of the money contracts, like end of the chain. Did anybody have 80s on BBBY going into this run? What was the highest IV you saw? I wasn't really paying attention to them. I didn't have any, but I blame me for not advising you to buy Rev 35Cs back in June when they were 5 cents. Sorry. Is Jan 2024 enough theta on Fubo? I mean, I have those. I have Jan 2024 $10 calls. V price target of 200 still relevant. Um Where's my TA on this? Oh, okay. 207's the next downside resistance. 200 after that. Sure, but it's a hell of a move. I'd be very careful after crossing 207. Especially if the market's gonna like rebound. That gets rejected. Yeah, I would say 207 would be my target. I'd at least put some stops or take some profits around that point. You could try for 200. It could happen, but it may not. If it does, it'll likely gap down to it again. Is usually what happens. Any major economic reports this week? Yeah, there's the um Fed meeting in Jackson Hole this week. The Economic Forum. Other than that, just new home sales, I think. If Perlman had the ability to squeeze it, why hasn't he done it yet when the price was cheaper? Because you need interest to create a short squeeze. It's all about timing, right? He's positioned well to do it. Or he's just created a situation where the chance of a squeeze is very high probability and he's simply waiting it out. CFO popped into my office for a couple hours at the end of the day, Thursday, and cost me tens of thousands. Ouch. Yeah, you want to make sure that you have your overnight stops for shares set to extended hours. Sorry to hear that, man. That sucks. Sue him. You showed on Friday that there are a lot of FTDs due Monday, Tuesday, Wednesday on Rev. I'm thinking of buying 15C September 15s at market open. Any thoughts on that position? It doesn't sound terrible. It's probably enough exposure for those few days. Thoughts on Tesla, Opex, big VWAPs? You're playing the pre-split? Maybe. Sure. I closed my Tesla puts Friday. They didn't quite hit the level I wanted to see them hit, but playing Opex on Tesla is risky. It doesn't always run. It's more consistent than GameStop, but it's riskier, and sometimes the run is shorter lived. Like the rug pulls are really fast. Trying to understand the Revlon. Some guy owns 80 plus Revlon. Some guy owns 80 plus %. We want to come in and buy calls, and there's a failure to delivery rate that's higher every time they try to cover it, and they have 3 times loan from a supplier. Failures. Hold on. None of this is written in like English. 3 times loan from supplier failures, not anything else, and FTDs due during Opex. Yeah. You can buy shares too. I bought shares. I have 6,000 shares. Shares are nice. But yeah, essentially when it runs up, the failure rate on Revlon is higher than the rate, like their ability to clear them, right? And so it's a compounding failure rate. If enough interest came into Revlon, it would squeeze harder than GameStop did. I have very little doubt about that. Barring some unforeseen event, but yeah. Based purely on the mechanics, yeah, if enough interest came into Revlon, it would squeeze. It might take a while, but it would squeeze. I think we see SPY breaking down and bouncing Monday afternoon. It can continue to break down. I carried some of my positions, my short positions on the SPY over the weekend. So, very possible, yeah. Sorry if it's been asked, but if Rev starts really running, what would stop Perlman from dumping his position like RC did on BBBY? Well, he would still have to file the Form 3. Or the 13, like the Form 4, sorry. Form 144. So he would have to tell everyone in advance. And he is in fact like a insider. So yeah, I mean he has to file a 144 in advance of his sale. So nothing, but he hasn't sold yet, and the price has been significantly higher than it is now, right? Also, his cost basis is like $20. If Revlon hit $20, I'd already be rich. So it's not getting delisted in October. They're having a hearing to see if it gets delisted in October. I would say it's very unlikely Revlon is delisted in October. Is Fubo dead in the short term? Not necessarily. If it's picked up enough interest over these last few weeks, it very well may run with Opex. It used to. It used to run quite hard last year. After November, it kind of stopped running with Opex cycles, but uh, Fubo like back in January of 2021, Fubo was like one of the most heavily shorted stocks in the basket. And when they doubled down on the short positions across the basket at the beginning of this year, Fubo really got hit fucking hard. Um, Fubo's been basically straight down since November. It ran a little bit for like March Opex here. It went from like 5 to 830, but not a lot, right? Interest has been really slim. But with their new announcements and stuff and IV spiking, the vol sellers will want to come back. The stock's got a very liquid options chain. I used to own shares of it and I used to sell covered calls on it. It was very profitable. So I'm more than happy getting back into it, especially now, they just beat Q2 earnings. Um, Things are starting to look better for them as a company. I mean, I'm buying for the long term, but I'll play the short term as well. I'll have you know I'm avoiding my responsibilities as a father to watch you today. Couldn't have gone better. Congratulations on avoiding your responsibility to your children, Lentil Burrito. You catch that beatdown Leeds put on Chelsea this morning? No. No. You showed on Friday that there are a lot of FTDs due Monday, Tuesday, Wednesday. Okay, I covered that. Tesla. SPY die next week. What a great question. I think we see SPY breakdown and bouncing Monday afternoon. I think we may see a further breakdown of the SPY. I know after hours futures were pretty rough and the VIX is spiking, which is a very good sign. But my target range for the breakdown would probably be like, I mean, obviously I'll do the analysis for Pickles picks tonight, but I'd be looking at 418. A breakdown of 418 potentially back to 410. But that could take a couple days. So that might be like Tuesday morning with a reversal Tuesday morning because of Opex. Jimmy no-pex again. Thoughts? I'm well aware of JFresh's position. I agree that if we do see a run this week, it will be smaller than, like something like March was, right? But I do think there are still obligations due outside of the gamma hedge or the delta hedge. And technically, Friday the hedge flipped, so on the drop. So there could be a little bit of a like an offloading of those puts from Friday. Thoughts on BBBY? I feel like I covered that. If something's gonna happen, just be prepared to enter or get yourself cheap exposure. Just don't carry bags for weeks on end. They're supposed to make an announcement by the end of August, so you know, try to get some cheap exposure now that the prices come down, especially if volatility continues to drop off. V has earnings coming up too, right? Yeah, I don't think those are going to be bad though. So I probably wouldn't want to continue to hold any kind of short position into their earnings. I think their earnings aren't until October, if I'm not mistaken. Yeah, October 26th. So you got a little while, but I wouldn't want to hold any short position into their earnings. Yeah, it's out here. You got quite some time, actually. That may even help build some short position. Thoughts on JPA's upcoming Jackson Hole speech? Over under hawkish dovish. I think hawkish. I think most of the Fed directors are kind of pushing for that increased aggressiveness into the end of this year. Probably with the hopes to pull back in Q1 of next year. Is Apple Weekly on the top of a down channel? Big moves down soon. Fucking Apple just hasn't stopped going up at all. Yeah. One could argue that it broke through though already. Actually, I would argue that it already broke through, but the rejection here, when it falls back below the trend line, is pretty important. As will an additional failure. I would look at a failure of 170. If it fails 170, it could very easily come back down to like the 161 range. There's actually very little support in that area for it. Generally, Apple moves through those ranges really quickly, so or it has since last year. You may even see it run back to fill this gap at and this is a gap at 157. I wasn't really interested in the price they got to. It was Ekoversky. I was more interested in what the IV hit intraday. I think it hit like I saw some that were like 600, 630% IV. V has earnings coming up too. Yeah. Perlman gonna make us rich or just pure hopium? I mean, you don't want to look at it like that. Don't look at it like he's some fucking hero or something like that. He's like, at one point in time, he was one of like America's wealthiest investment bankers. The guy's definitely a piece of shit, right? But look at it like this. He's got an underwater position at $20. He bought into the stock to squeeze it at some point in time. And he hasn't sold. Right? So he hasn't, over several years, he has not taken the loss and moved on. He has actually lost a significant amount of value in his holding company due to his diamond handing of Revlon. So something worth considering, I think. I don't think you need to make it out like he's some savior or he's gonna do right by us or anything like that, because he absolutely didn't buy with that intention. But I do think that you can, look at the position he's in and use that to improve your own analysis. Revlon has a lot of incentive to not only get their stock to squeeze, but to get it to squeeze quite high. If it sustains a squeeze over 30 for more than 10 days, they force exercise the warrants on a huge chunk of their debt. Um, you know, uh, the float's already locked up for the most part. They're actually in a great position to then release some liquidity, not even much, right? And in order to clear all of their debt, they would need the stock to squeeze up to like $90. And if it ran up to $90, let me tell you, it would probably just keep fucking going. You sound better. I feel a bit better. I'm still running kind of a high fever, like 101, 102, but it hasn't spiked back up again. Let me start looking to play some Amazon 135, 930 Ps. 930 enough theta, or would you go further out? I actually have a play for Amazon puts I was going to talk about this week, but I guess I can kind of cover a little bit of it here. So I think Amazon's going to fill this gap back to the downside at like 130. I wasn't going to play 130s though. I was going to play 135s. It could continue dropping, don't get me wrong. It could fall all the way back to like 116. But yeah, there's a play there. I think 930 is probably more than enough time. Um, you wouldn't want to buy out until earnings, which are in October. So, a nine. I don't really understand the 930 choice. Um, like why not the October monthly expiration? Like I don't understand when people choose weekly expirations for their options. Like you're just guaranteeing low OI. Even on Amazon, as liquid as it is, like the OI is not going to be that great on a weekly. So, I would probably target 916 or October what the fuck is it? October 21st, I think. Yeah. But no, yeah, not a bad play. There's definitely some good downside there. But you want to watch 132 very, very closely. It could absolutely reject on that point, and that would be bad if it bounces there. Well, I'll talk. I just want to say thanks to you talking about Carl's low T count. I've been getting ads on Facebook for testosterone supplements. That's just because you've been looking up testosterone supplements. Rev is gonna happen, or I'll lose my BBBY profits. I can do everything now. I'm quite excited to be using options exposure to profit. Nice. I can't get over how bullish Wall Street Bet still is on Bobby. There are tons of super bullish posts about full porting in the morning. Cool. I mean, I still have $105 leaps, right? So, fuck it. If they want to pump it back up, awesome. I can sell higher. If Rebecca is to squeeze, would call contracts become harder to sell versus selling shares? If it truly squeezes, yeah, potentially. Not impossible to sell, just harder to sell. When will have its next round of FTDs? Beginning of September, when the July ETF FTDs come due. Yeah, we could see a rev run for Opex before it comes back down. Also, remember something I was saying. I think a lot of people forgot this. You know, me and Gaff have found some pretty compelling evidence that the number of FTDs reported by the SEC are not equivalent to the number of fails that actually occur. If you look at, you know, volume on the dates and failure rates on the date of generation of FTDs versus the date of the covering of those FTDs, the volume is significantly higher on the covering days, which, you know, is partly explained by ETF FTDs. But remember, you know, a large chunk of FTDs are marked long before they ever fail and before they're ever reported. Right? They can be marked long, they can be rolled forward, they can be cleared, they can be T+2+2'd out. There's a lot of tricks they can do to prevent reporting of them. So, you know, we're getting a report of FTDs, but it's starting to look more and more to me like that's kind of like a guideline of what FTDs look like and not an actual value of FTDs. You know, the other day we had 1.3 million FTDs declare on Revlon. You know, no one was really buying the stock, and yet it traded, you know, 15 million volume. That wasn't because of retail participation or FOMO. You know, some of that is, you know, them trying to clear FTDs by using the options chain, right? They're buying calls, exercising them, then exercising that on a put, and you know that's generating like 200 volume per rotation, right? And generates tons of volume in order for them to clear a much smaller amount of FTDs. But also, you know, there's covering far in excess of the amount of FTDs supposedly due. No, the compounding of FTDs is already confirmed by the fail to volume ratio in the previous report. Actually, the period next being reported should have fairly low FTDs across the entire basket. That's it's generally a lull period. There may be some higher FTDs in the initial part of the reporting period. But the latter part of the reporting period, like the next 13 days, are usually pretty dead. You want the second half FTD report, which is what's going to be happening over this week. And we won't get that until the end of September, middle of September. Pickle Jar makes its own squeeze with Rev. I don't know if we could do that. That's a lot of capital. But there's, you know, there's going to be institutions and stuff interested. I think most people are playing like weeklies and just trying to scalp runs. That seems to be the majority of people interested in the play. Hold on. I know I'm really far behind on chat. If you guys haven't been in here before, I try to kind of catch up and get to everyone's questions over the course of the stream. So Just, ask your question and bear with me. It may take me a little while to get to it. I'm about 20 minutes behind right now. Have you taken a look at Curve? Yeah, I have. I'm not like a huge fan. It's got some interesting shit, I guess. It wasn't really around in the early parts of like 2020 and 2021. And for that reason, I don't think it has as much short interest. But it does have some. I'm aware of it. It kind of falls more into like in line with like Victoria's Secret because they IPO'd like the middle of last year also. So yeah, the runs tend to be a little less compelling. But sure, I mean there could be plays there. Also, I'm not really sure how successful as a company they are. Their earnings look good. What about expanding PCO list on Rev options? Any chance they PCO the whole chain at some point? No, I mean the reasoning for PCOing the $8 strikes is valid. It's just odd, right? Like they should have kept the 8 open and PCO'd the 750s, but they didn't. They went the other way and kept the incorrect strike instead of the correct strike, which is strange, but whatever. I don't think they're gonna PCO the whole options chain. There's too much interest in it. They have warrants that get unlocked at 30. Yeah, well, not unlocked, forced exercised at 30. If it stays above 30 and change for 10 consecutive days. But those warrants are owned primarily by debtors, right? Like, but that would clear debt and it's only like 2 million shares worth, which is not enough to stop a short squeeze. Guy's daughter is the CEO or CFO of Revlon, has been working for years to keep Revlon running. Yeah, she's one of the directors, his daughter. If you have 2024 $10 Fubo calls, would you exercise or prefer to sell them? I guess that would depend on what happens with Fubo between now and then. You can use them to sell. Don't forget that especially if they go in the money, you can use them to sell naked calls. Are my 100 VIX $20 calls for September gonna make me rich? 100 VIX 20s for September. Maybe. I still think it's funny there are 3 people that own Revlon. Pickle Jar, Morgan Stanley, and Perlman. If it is no-pex, do we enter a period of GME downs? If so, how long? Until September, probably. Even so, you guys got to understand this. Even no-pexes are profitable. They're just less profitable, right? Obviously, like true Opex runs that have all the stars in alignment can see upward price movement of like 50 to 100%, right? But even no-pexes see significant price improvement, right? It's still like 10 to 20%, even if we don't have the positive hedge. You could argue that November was like a no-pex, right? But like if you look at like June, right? So June 17th, that's to the peak, which was actually on Friday. It was a 20.6% increase. July, which started here. Yeah. July to the peak was an 18. Hold on. 21.43%. Right. So even on the no-pex, right, the price improvement is still quite dramatic. You can even go here to like January, right? Like January 26th. We went from a low the previous day to a high 37% higher, right? So yeah, even the no-pexes still generate price improvement. So it doesn't, I don't think it really matters as long as you get decent exposure and you have solid theta and you can stay exposed for those like 3 to 5 days without suffering too much in losses, and you capture profits. It is a profitable event and it shouldn't be ignored. Don't get me wrong, when everything's perfect and we get like a true Opex run, we get stuff like May, right, where we see like a 67% increase, or like March where we went from 168% increase, right? So obviously like a true Opex is much better, but no-pexes aren't half bad. They also represent an opportunity to capture increased volatility with covered calls. At the top, they present an opportunity to buy far dated puts at or in the money. Like there's lots of opportunities, right? With IV spiked Friday, there's opportunities to sell cash secured puts in this lower range and harvest some of the IV there. It's just, you have to take advantage of what we've got. And if it's going to be a series of no-pexes that follow this trend, we can still make money off that. Like, you don't stop making money just because the stock's not running 100% every month. Yeah, I think Fubo is a good long-term candidate. I'm interested in holding it for some time. What do you make of the latest hopium-induced theory that RC will buy, baby? If he's doing that, he may do like an equity purchase through GME. Remember, GME has a lot of free like available equity right now because they increased the amount of shares that they can release. If we get a true Opex, maybe. I could see RC wanting to pick up baby. It fits his like thing about getting customers excited, and it's a niche, right? Baby is not so different from pets. People aren't going to stop having them. It's pretty recession proof. The margins are strong. I mean, it's not out of the. I've talked about it before. I talked about it when they announced the split and the change to the corporate charter, that RC was likely looking to increase that equity in order to purchase companies during this recession period. That is ideal, obviously, for any company to buy out or acquire new companies during an economic pullback. And GameStop's kind of cash rich. I mean, not extremely, but a little bit. But they are equity rich. What's the best protective stop to use on options and Fidelity? Are you watching the position or are you walking away from it, Chaku? If you're watching the position, you know, a limit stop seems more than sufficient. If you need to walk away from the position for long periods of time, like while you're at work, some sort of trailing stop, or a stop loss. Set it and forget it type of thing, right? I mean, Apple and Amazon are propping the SPY up quite a bit. Some potential small upside. Yeah, okay, so I covered that. Are you still in SPXS and UVXY calls? Yes. Not UVXY, I need to reposition those. I mean, I have UVXY calls, but they're for my hedge, and they're not speculative. So I need to reposition my speculative UVXY position because it was starting to decay a little faster than I wanted it to. Question, why do you measure cuticles in millimeters and not US measurements? London's still in there somewhere? Maybe. David Major, thank you so much for coming to Dillionaire, man. I appreciate it. Hit me up on the Discord. I'll get you added to the country club after the stream, dude. Are you looking at any new tickers for Pickles Picks? Maybe. I mean, Fubo was new last week. Generally, the positions I take, I stick with stocks, specific stocks, for very long periods of time until they don't interest me anymore. And then if they become interesting again, I pick them back up. I generally am not hunting the market for new opportunities because the ones that I have found are already very, very profitable. I mean, I'm up fucking like 24,000% on CAT since last year. Why play something else? Like, why find new tickers if I've already got a solid moneymaker? Don't get me wrong, I always keep my eyes open, but yeah. Sometimes I'll trade the same stock. I mean, I've traded Tesla for fucking almost the entire time I've been trading. I still trade it, right? And it's still very, very profitable. So there's no reason to not trade that anymore. Or to kind of dilute my concentration. And would RC be selling his entire BBY portfolio support this narrative? Sure. He can't be an insider and acquire Buy My Baby both. No, he can't. Yeah, he did exit. Carl Icahn did exit his eBay stake before the PayPal spinoff. That's accurate. Carl Icahn also way better at doing the activist investor / corporate raider thing than Cohen is. He knows how to speak to the public and get people rallied up and get those shareholder votes on his side, right? Cohen's still not great with the public stage, I don't think. He says he doesn't prefer it, but I wonder if that's just a lack of experience on it. I tried selling GME CCs at the top of Opex this week. Do you prefer deep in the money strikes or at the money with 14 DTE? Generally a mix of both. I don't go deep in the money. Like I wouldn't sell a $30 covered call because that just guarantees assignments, right? But I might sell like a delta of like 0.6 or something like that. 0.55, 0.6. I have no reason to sell deep in the money. And then the majority will be out of the money. Out of the money, shorter days to expiry, 14 to 21. Thanks, Glider. Yeah, I'm not dead. Is it chasing if we enter Opex on Monday, or are we too late for Rev, Fubo, GMA? I mean, we'll find out Monday morning, right? Perlman can pull an RC on us. Sure. That's any stock you trade with institutional owners. You can always be reg pulled. That's why you set stops and you take profits. You know, if you managed BBBY responsibly, and this isn't a dig at anyone who didn't. Obviously, the news was unexpected, but if you did manage it properly, if you did set price targets and you did take profits, and you backed out on major resistances, you would have made an extremely good amount of money off of your BBBY position. I know I didn't even manage the position that well, and I walked away with very, very good profits. So, somebody could have managed that position better. I could have managed that position better and walked away with even more. And it really boils down to position management and not buying shit with the hopes that it's going to moon. You need to take profit. You need to set risk, and if you do that, you will walk away from all of your trades more profitable, or with far more reduced losses. Can you please share your strategy in playing UVXY calls? You mean as like a hedge? I buy VIX, and I used to buy VIX and VXX. Now I buy VIX and UVXY and VIXY. Basically, I buy very deep in the money VIX positions on market rallies in order to hedge my portfolio against the downside. Or against corrections, because even in a bull market, you generally have steep, aggressive corrections that spike volatility market-wide very, very hard, right? And so to prevent loss from that downside, especially on shorter dated positions that I may be holding open at the time because I'm a trader, I maintain a consistent hedge on the VIX. And then, if VIX spikes, I then capitalize off of the move. If it's not spiking or the market's continuing to rally, then I simply sell like out of the money naked calls on my VIX position in order to reduce the theta cost of holding that position open. It's not very complicated. It's kind of simple, but it works. It's effective, right? And I'm not a hedge fund. I can't spend thousands of hours concocting the perfect hedge for my portfolio. So it works, and that's all that I care about. Generally, my risk management is good enough that I don't need it, but it's not. It's saved my ass a few times. And with SLD and SLD's effect in this highly liquid market, it's been very profitable as well. Before I enter my 5-day nap again, are Reg Show and last week's FTDs that need to be cleared by September 2nd still of any significance? As long as Bobby remains on the threshold list for 11 more days, sure. Yeah, they do have a significance. Or would you think the Bobby bull thesis is pure hopium at this point? I think a lot of it's hopium, or trying to be built on the back of hopium. There's real effects, there's Opex this week, which could trigger a run. There are FTDs due, there are obligations, but holding a position open that was profitable at $20, $25, $30 at $10 is fucking stupid. Right? You need to reposition. You need to reposition and realize that the next run is probably not going to be as strong volumetrically, and the price improvement is not going to be as great. The odds of BBBY short squeezing are slim to none without an outside catalyst. And probably very low to begin with anyway. Bobby is very, very liquid in comparison to a stock like GME. What do you make of the CTB dropping on Rev? We expect CTB to drop in the period that cost to borrow dropped on Revlon. It also spikes very, very quickly because there's not very many available shares. So it's cost to borrow on Revlon's extremely volatile. It started to move up Friday, I believe. It went up like a point. Diamond Hands Perlman, interesting. Hope you're feeling better, bud. Excited to listen to the beginning of the stream once we wrap up. Thanks, man. I'm a little bit better. Still kind of sick. Starting to feel Tired now. In case Rev runs next week without squeezing, when will we have the next FTD round? Early September. By September, Amazon 140s are happy right now. Nice. Make sure that you have some risk set on that in case there is dovish info out of the meeting this week. Friday, when you were thinking out loud, closing SPY puts, you seem to be concerned about T+2. Was that T+2 about SPY calls or more for other stocks across the market? Both. I kind of remember what you're referring to. There's some that I want to hold into Monday, and I kept those open. And then there were some that, I wanted to reposition after T+2. Can you discuss the significance of Fubo trading 150% of its all-time high volume on 8/16 at 165 million? Previous was 105 for 2021, and the price is $23. Will it be a C35 kind of deal, or can that cause VUPs this week? Fubo has a lot of ETF exposure, and in a lot of like really shady ETFs, like metaverse ETFs and stuff like that. It's in the Russell 2000, like IWN, but it has a lot of like really odd, kind of like GameStop. Like it's in a lot of really odd ETFs that seem to be just there to hold Fubo stock for creation purposes. So it used to run very, very hard on Opex periods. It's why I owned it last year. I'm hoping that revitalizes now with their better earnings and more interest in the stock. I think what you saw happen the other day is a large amount of institutional buy-ins. Fubo has a lot of promise, and it's currently trading at just short of its own book value. So yeah, it could be interesting. Locking down distribution rights for any popular sports is a huge deal. That and their, betting software that they're building out, especially with, over the next year, a lot of states potentially legalizing, and some have recently legalized online sports betting. They could really see some improvement. They're also an attractive buyout target for companies like DraftKings or, some of the bigger casino stocks looking to buy up that software development without actually having to do it themselves. You expected Rev to run right back out of the gate in pre-market, or you think we'll have an opportunity to get in before a major run? There's always an opportunity to get in. You think there's a net worth level at which you'd shift into long position value stocks? It's not really that there's like a cap where I'm like, oh, I'm going to just put everything in long positions at this point. I'm just always bleeding some of my profits off into long-term positions, right? So over time, I'm consistently accruing long-term positions, most of which I sell covered calls on because the yields are far outperform dividend yields. I do have some dividend stocks that are kind of just there to, I guess, ensure a retirement or something in the future if I ever need it. But no, I think I'll always keep some amount of active portfolio management. I guess if it hits billions, I'll have other people do it for me. But right now, I mean, I outperform hedge funds and I don't pay a commission. So I think there are very few hedge funds that you could find that outperform even Pickle's picks. Like I'm not saying that to brag, it's accurate. So yeah, why stop? Sorry for the dumb question, but when is the last day of GME Opex falling on? Wednesday is the last. Well, if we run really hard Monday, Tuesday, Wednesday, that'll create feedback in the market maker, right? Which drags us out to Friday. Now, if we run really hard on Friday, we will run really hard the following Monday, Tuesday. So, you know, obviously, if Opex is realized to its full extent, it can continue to perpetuate. Even June, you know, saw its high on Friday. So, but at that point, you know, any positions bought now would already be very profitable. So it's not really like a concern. But yeah, it can drag out beyond the week of the 26th. If you're trying to position for OPEX with weeklies, it can be a mistake and you can leave a lot of profits on the table doing that. Even if you do get the slightly increased leverage, it's generally not worth it. Not to mention if it's unrealized, if OPEX is nothing, then you will simply lose all the money you put into weeklies. And that's why I buy like the next month expiration generally. So like September like 16 calls, or what I bought on Friday. Sometimes I'll buy weeklies to capture the bigger parts of the moves and then just sell them off. But remember, like you're in and out of those positions generally within the same day. Did you buy those GME calls in the hopes they would mark up IV, or did you see it coming? I mean, it was in the hopes that they would mark up IV, right? IV had bottomed, so I was assuming that, you know, based on what they've done in the past before an OPEX run, if an OPEX run was going to be realized, they would mark up IV. So, no, I didn't tell the future. It's just I positioned myself well if they repeated the same behavior, which they did. So that's a positive. Any thoughts on GSAT? Made a 500% move in Jan 2021. Is it making a base since Feb? Broke out on 8.3. I vaguely remember this. It actually moved harder, I think. Yeah, it moved harder in Feb. There's some alignment with the cycles, like a little bit, not a lot. It's weaker. Their earnings have been getting better. I mean, I really don't know what they do. They're a tech stock of some sort. Some, like, I don't know, man. Penny stock, fucking satellite companies don't really interest me very much. I also think Rocket Labs is kind of a big pile of shit, but you know, everyone's got just different opinions on that. No, I can't say I'm fond, and I wouldn't want to play this anyway. Uh, I don't buy stocks that cost like less than $5 very often. One, my position size would manipulate the price and cause too much slippage for it to be worthwhile. Two, the options chains are generally pretty weak or wide, which I also don't like. If you have a small account or something, they're fine, but they tend to be very risky and volatile. I mean, I already have a position on BBBY. I don't need more, right? I have like 100. I have 100 contracts at 5. Sure, I'll buy more if it starts to like move or something looks bullish, but in the meantime, no. I might buy some for OPEX exposure tomorrow. Um, but I mean, frankly, IV's overpriced. As and without Co in there, so's the stock. If you guys have read, you know, securities analysis, I don't I don't buy stocks that are priced over their value. It's not my deal. I'm just telling people that they need to not put so much faith in those FTD numbers, because they do. You got guys like Bob's running around trying to predict the number of FTDs, and other people are trying to, assume what volume will be like based on those FTDs. And frankly, I think those FTD numbers are just bullshit. At any given time, I don't think they accurately represent the number of fails. Thoughts on wheat? I mean, I'm long it. Either the thesis will play out over the next year, or continuing into the next year, or it won't. Opex was Friday, but the effects are seen after opening bell Monday through Wednesday coming. Yes. So the settlement of Opex follows the expiration. So the expiration, the Opex date, is the 19th, but the settlement, which is what we play options on, follows in the coming week. Briefly, back to Jamie Opex position. You spoke earlier. I grabbed some 916.45C Friday at a cost base of 1.6. Now I'm 70%. How do you decide whether to hold for Opex and take profits? That's a good question. I have a few that I bought Friday that are up like 100%. I know what you mean. It's hard, but if anything, you're in a better position with that profit. I mean, you could set a stop and protect some of those profits that you've made. But yeah, I mean, you entered at a really, really good time right before they priced up IV. So, bullish, right? It just means that you have a far better entry and far more flexibility with how you manage your position next week. Could it end of March into May? Yeah, sure. Yeah, it's very possible. Thinking Rev runs hard for Opex. Sorry, the chat just gapped down. I lost my spot. Where'd it go? Has anyone written a DD for Wall Street bets on Rev? No. I mean, I could, but I don't really like. Usually, most DD posts over there get taken down by the auto moderator, so I don't really write too many of them for Wall Street bets, because it's just like I do a lot of work and then it just gets auto shut down. Thinking Rev runs hard for Opex, then a dip afterwards, and another run? Or are we thinking a squeeze in the coming weeks? Hard to say, right? Because the FTD data we have, I just said, isn't probably a very accurate representation of the total number of FTDs due. This would be maybe the last, this in September are probably the last exposures that Revlon will have with ETF FTD, like ETFs, right? Because after July 30th, it was removed from ETFs. So any exposure generated after that likely won't be an ETFs and would be on the market maker side. I think they've been trying over the last week to clear as many FTDs as they can before they have to run the stock for ETF obligations created back in June. And then September, July, right? If you understand CNS, it makes sense FTDs are way higher than reported. Only the ones spilling out on reporting date are the ones reported. So T69DD says it could be multiples more. Yeah. I'm just trying to explain that in a way that's a little more understandable than the T69DD, which has never been truly accurate, but it's correct in the points it makes. But trying to time things with T69 is kind of a misnomer. Thoughts on why Rev came of Reg Show? There are so many FTDs on a low float. Shouldn't it go back on soon? It could. It very well could this week.
I wouldn't be surprised if by Tuesday we maybe end up back on Reg Show. It'll either be Tuesday or it'll fall back onto Reg Show on the futures expiration on September 16th. Gary Gensler's twin, welcome to Dillionaire. Thank you so much, man. Hit me up on the Discord. I'll get you added after the stream. If GME runs a little next week, how far out would you sell covered calls? Probably into like 14 to 21 days. Is a monthly option on Rev too soon, or should we push out to Jan? I would try to get longer exposure while it's cheap, if possible. What are the chances of Rev breaking the options chain next week? Slim. How do you decide when to enter a SPY hedge? If your thesis is the SPY will drop, what indicators to enter a short-term call position? Higher volume on an uptrend, bouncing off a resistance. I mean, you want to follow the technical trends, right? You know, generally you want to enter a hedge on a confirmed bounce, and if anything, you actually kind of want to enter a hedge on an unconfirmed bounce. So generally, if I'm swing trading the SPY and I'm entering a hedge, right? Like I would enter one here where it's moving back on low volume towards a resistance, then I would enter like a call side hedge, right? And if I was long, like, you know, when it's being rejected, I would wait for like a retest and then enter a short side hedge. So like I long side I hedged the long side of the SPY twice. It was like here and here. They were both very profitable, obviously, and really saved my ass on my short positions. But if you look at both of these, they are relatively similar, right? Like I'm entering alongside hedge on an approach of a bounce. And that way, if it does bounce and trends bullish, I'm hedged for the next upside move. And, you know, you can factor macroeconomic data into that, which I did at the time. But that's a good way of hedging the SPY on a swing trade. On intraday, it's a bit different, but I'm not going to get into that. Thoughts on Party? Ugh, not a huge fan. I know it's over short, but its seasonal interest makes it difficult to play. Planning to continue adding to my Rev 35 leaps, but for capturing profit on potential Opex volatility this week. Scalp September's thoughts? I mean, sure, but just remember if Revlon does run, it will probably run unexpectedly. And if you're not positioned, you will not make very much money on it. So while it's fine to like scalp, yeah. So what you're doing is fine. You know, if you want to like build a long position and then scalp with shorter term time positions, then that's probably fine. Its runs are still kind of unpredictable though. Like because they're running just off FTDs and like they're only obviously buying the stock when they don't have enough volume to clear through CNS. Why isn't this taking off? There were articles on a squeeze in 2019. I mean, it's trying to. Choose 9:30, 35p Amazon instead of 9:16, just in case SPY decides to bounce back and retest high. I've been burnt. Why wouldn't you just close? That's the real question, Mike. If the SPY bounces, you just close your short position. You don't fucking hold it open and try to hold your short open through the bounce. Right? You just close and reposition. And then when it's done bouncing, you buy new puts. Especially if you're that like far out of the money, right? Like 135. I thought you said 130 earlier. Maybe I was mistaken. But 135, yeah. Like, I'd rather have the 916, have the better OI and the better spread, and then just, hedge or sell on a bounce and reposition at the top. You mentioned Rev $10 calls have less extrinsic value than $35 calls. Well, because Delta maxes out at 1.0. Well, boy. So a $35 call is 0.36 Delta. A $10 call is probably like closer to 0.5. And so the potential value of the $35 call is far greater than the potential value of the $10 call, because after the $10 call hits 1.0 delta, it will just behave exactly the same as the underlying, and to a slightly lesser degree, because of theta decay. So the $10 call at $20 will just be worth like $20, but the $35 call at $20 still won't be 100 delta, right? So it'll have a lot more room to grow. Out of the money calls are always on a large move more profitable than at the money or in the money calls. Do you have a price target for Fubo next week? Not really. It'd be cool if it runs on Opex. I don't know if it will. Would that be bad for DRS with all the new shares? Oh yeah, terrible. If someone is very much in profit and GME in a Roth IRA, for what reason would one not sell in the pre-Opex run after the drop? Buy calls as short-term gains and Roth don't matter either. Why would one not sell in the pre-Opex run after the drop? Wait, what? Can you rephrase that? Leave out the Roth part because that's inconsequential. I don't care about your short-term capital gains. Just try to ask the question you're trying to ask without the IRA stuff. Because I'm not sure what you mean by selling in the pre-Opex run. You'd want to sell in the Opex run. That's when the price would potentially be the highest. Revlon announced 25 mil at the market share offering in April. It's already completed. It doesn't matter. Both of them were relatively small, and I believe that both of the share offerings are completed already. Can you please explain how to view single leg option strikes in chart form to track the price action of it? Oh, on WeBull, if you want to look at the chart for an option, right, you go here and then you would select, like, say you want to look at like the Jan 23 $5 strike, you would right click and then you go view BBBY. You can't see the pop-up here. Hold on. There's a pop-up comes up when you right click and then you go to view BBBY $5 call in stocks, and you click that and that will bring up the options chart, and this is the options pricing chart. Same thing on IBKR. You just like right click it and you can view the chart. I'm not sure how to look at the options chart on ATP, but I know they have one. Now you can look at it like the 1 hour. Thanks to Bithead, I can now comment. Last week on the outside, looking like a pour was awful. Welcome back, guys. I have a theory on NXST. It owns rebroadcast companies. Going into midterms, there'll be a record high spending on ads. Any thoughts on Leaps covering 1 quarter? Seems fine if you have a solid thesis on it. You'd want to cover the quarter that they realize the earnings from that, though, right? So you'd probably want you'd probably want to buy in and say if they're spending on midterms, you're gonna report early 2023. I don't like 200 Ps. 207's a really strong resistance. I wouldn't pick up 200s. 210s are fine. I have 215, 210 open on Visa right now. I wouldn't buy 205s or 200s yet. Maybe there's a midline here. If it slips that, I'll try to draw it for you. I used to have it on here. I don't know why it's gone. I think it's right about there. Oh, that's why. There we go. A little higher. Yeah, I still want to buy 200s. They're too far out of the money right now. Visa and Cat, you don't want to bet really far out of the money because it's just not like the move's just not guaranteed. If Visa bounces again at this like 207, like it touched 203 here. But like there could be some volatility down below this, but it'll probably hold that line, or at least for a little bit. If it did, if it locked up there and maybe bounced and then was rejected here back at 207. So like say this falls here, right? Bounce, fall again, then bounce, test, fail. Then I would consider 200s. But currently, I absolutely wouldn't buy a 200. It's too far out of the money. And this hasn't been updated, but the risk here would be at like 216, I think. So like if I was doing this, entering this position now, it'd probably be like that, and then like there. Like that would be my target range. And really my risk would probably be more in line with the upper trend than it would be with 216. Curious how you found Rev. I picked up somebody talked about it on stream. I picked up some calls on it on Friday, and I was like looking at the chart and some of the historical behavior. And then that night, me and Gaff were kind of just fucking around, and we started digging into its like FTDs and stuff, and some of its financials, and it started to look really, really promising. And we kept digging, and it looked more and more promising. And then the following Monday, I bought an obscene amount of out of the money calls and made like 400% on them, and I've been in it ever since. Why would you be interested in buying Bye Bye Baby? It's profitable. A profitable business. Why not? You see Cat moving above or below the channel it's in soon? Cat got rejected, so it may move back down to like the 186 range, at which point I would consider re-entering. There's a gap to fill to the downside here too. Ideally, I'd like to buy it below 182 or at 182. I just don't know if it's going to hit that again. What's on Jan 24-25 Cs instead of shares on GME? Offers like 50% leverage, and you can sell CCs against probably for most part of the entire time window. Sure, yeah, you could. I'm not sure I like that price. GameStop could potentially fall below it. I really don't like buying deep in the money calls on GameStop because it's so volatile, right? Like we've been below $25 a few times this year already. And sure, we bounce back, but going below on leaps like that, it's really shitty. If you time them perfectly and get really good IV, maybe. I think Docu will run for Opex. Usually does. To some degree. It might. I think we're probably taking profits. Is my risk is set at 100%? Risk it for the biscuit. Yeah, you don't want to do that generally. I mean, it's hard when you trade options because like your risk is higher, right? Because you're willing to sacrifice more premium because, you know, obviously you're getting far more leverage for way less money by buying options than you would if you bought stock directly. So it also like kind of expands, you have to expand your risk a little bit. If you set 2% limits on options all the time, you're going to fucking lose your ass. On like 100% of trades, you're just going to get stopped out. So you have to have some more flexibility. And then, you know, the buy-in price is generally pretty cheap. So if you have a lot of money, it's very attractive just to let the premium ride and accept the premium loss. But if you want to be profitable, you don't want to do that. Are there any books or courses you would recommend on learning how to properly manage positions? Yeah, paper trade. Paper trade a lot. When selling options, how can we know the max number of contracts that can be sold easily all at once for a given strike, as opposed to putting in many individual orders, which is tedious? I mean, I very rarely sell all my covered calls at one strike. I just don't think it's that tedious. That's part of the job. Get faster at it. You're never gonna be able to sell like a huge chunk of options at one price without tons of slippage. Like if you're selling more than 5 contracts, more than 10 contracts, you're gonna experience some slippage in most strikes unless they're extremely liquid. I didn't find out about the news until $12 and exited at that price. I wanted to hold above 20 to keep holding, but we didn't, and it was bad. Yeah. I don't know if it would do much to help BBBY stock price. Maybe BBBY go up a little. GameStop would obviously go down drastically as equity was offered for the purchase. When picking weekly playlists, say macro looks bearish for the overall market, but the playlist for calls, do you still go calls or puts for that week? Why not play the SPY then? Well, macro, like every individual stock is affected differently by macro, like the macroeconomic outcomes for that week, right? Some are affected more, some are affected less. They're all, it's not all equivalent, right? Like, over SLD, Tesla might lose 6% and the SPY only drops 3%. And so, obviously you have to choose based on what you think will be most affected. And it's never generally just calls or puts. Sometimes it's both. You could just play the SPY if you want to limit the amount of information you need to pay attention to. But some would argue that the SPY is you have to have the most information to play effectively because of its exposure to so many different sectors. I have Fubo, Jan 23, 5, 10, $70 calls. Do I need to build a Jan 24 as well? Also, Rev 35s out of the position, or shares a better play to reduce risk? I mean, shares are cheaper and you're not paying for that increased volatility, but the amount of leverage is significantly lower. How do you set resistance and support levels for stocks? I draw them. Experience. It's more of an art form than it is anything else. I mean, there's things I look for, but like, I feel like if I told you look for the same things, you wouldn't get the same line. You just need to practice and you'll get better at it. They're in the Dillionaire chat. When Pickle Medallion collab where you take my money and make me more money. What do you think about investing in index funds, SPY, and selling covered calls? Sure. Problem with buying SPY, like buy rights on the SPY, they're fine, but you can end up really underwater. I wouldn't buy SPY right now after like maybe at the end of a bear rally. This seems like a terrible time to buy into the SPY. Like you'd probably want to buy into it at a safer level, which would probably be around like 360 to 340. And even then, that might be high. And now's not really a time where you'd want a lot of long-term exposure to the markets. I would wait for the economic situation to settle before being like, before going long on like an index fund. I mean, we could see the realization of any ETF exposure due to the split this week. It's possible. I think it's more likely that they would write forward contracts for September, but there's no way to know. We have no visibility on those. That's on Baba. October monthly 95 strike calls. Expecting a bounce off 90. Not staying down there for long. Yeah, I've kind of backed away from Baba a little bit recently. I really don't like the economic situation in China. One could argue that at 90 or 85, calls are fairly safe. It has some Opex exposure. So sure, it's definitely undervalued, but that doesn't mean the value is going to be realized anytime soon. I'd probably want longer than October, to be perfectly blunt. Your thoughts on a GCT run? I really don't care. I'm not going to speculate on it. It's a penny stock. Like they can just, if they wanted to, they could just crush the run entirely. It doesn't have to run. It presents little to no risk. That could be a reason for them to let it run, but it could also be a reason for them to just stuff it. Is 50K enough or close enough to influence the stock price or even cause slippage? I mean, that depends on a lot of factors like timing, the float size of the underlying, the bid-ask spread of the underlying. But yeah, absolutely. Also, the SPY gap fill back to 415, which is also the 200 EMA on the daily. Very possible. There's a gap lower than that on the SPY, like a big one. There's like a big fucking gap down here at like 400. So there's a huge one here at 415, right? 415 to 411, 410. But then there's another really big one down here at 394 to like 391, and then down here at 380 to 378. So there's a bunch of big gaps on the SPY to the downside. Jimmy, MACD, and RSI look very different on the 1 day and 1 hour in terms of bullish or bearish, I think. Which would you trust more when they diverge so far for nearer term moves of a week or two? For nearer term moves, I would probably rely more on like the 1 or the 1 or 4 hour. Obviously the daily is skewed bearish. And then, but if you go out to the 1 hour, yeah, it's starting to turn around. Generally, this will move forward, right? This move will then, increase the potential bullishness of the 2 hour, which is starting to look bullish, right? And as that looks more and more bullish, the 4, right? Then the 4 will start to come around, and then lastly, the 1 day will start to look a little better. But yeah, right now on the 1, 2 hour, the very short term, it looks quite bullish. So saying I shouldn't have full ported into Sundial. Oh Jesus. I know you didn't do that, but it's not even funny to joke about. Also, you'll know I've blown up my port when the name ungreens. For sure, Bean. I've never looked at pricing on the SPY straddle, the close before the CPI date. Seems like it's easy money, or does IV spike? IV spikes generally occur into the date. So like or into the release. So you'll get you'll get like slowly increasing IV into close the day before like CPI at 8:30. So you usually want to buy pretty far in advance, like midday, the day before. You think $10 for BBBY is bottom, or it can go back to 5? That depends on. I won't know till tomorrow, but it'll depend on how many $10 positions sold out on Friday. There's a really strong floor there, but if people sell their calls, then it'll fade. In the short term, what would GameStop Bye Bye Baby do for both GME and BBBY stock price? I already answered that. GME would go down. I don't think it would really improve BBBY's price that much at all. When you're picking weekly plays, say macro looks bearish. Okay, I answered these, I think. House. Ugh, we're going a little long today. Buying $9 or $10 Aprils and could look at rolling into Jan. Probably not terrible. That's like a decent chunk of time. But he said pre-Opex, which was what confused me. They're in the Dillionaires Country Club. There's a announcements channel for them. Historically, squeezes start on FINRA short interest publication dates in Jan, Feb, March. Next one is August 24th, Wednesday. Would you expect a squeeze starting this week? Yeah, I don't think that's accurate at all, but sure. And it's also just T+2 for Opex. But they don't care about the short interest reporting date. they have far more ways of not reporting short interest than covering it. I think that's just like best way to describe that, like a coincidence. Also, the reports come in, like the reported data is reported days in advance of the report being released. Kind B, welcome to Dillionaire. Thank you so much. Hit me up on the Discord. I'll get you added after the stream. Last week when Jimmy ran to 45 with Roth sell, then when it drops into no-pex, you're making up a lot of words. And Ivy crushes by calls. Okay, yeah. Yeah, you could do that. For ATP, click the tiny drop-down menu next to the option entry in the options chain window and choose chart, and it'll open with your default chart style. There you go. How do FTDs correlate with Opex? They don't. Opex generates FTDs. It's a FTD generation event, not an FTD clearing event. Seriously, if the CEO was worried about them going bankrupt, they would have sold stock on this last run. They just bought stock, which means they may not be able to sell it yet. Additionally, you know, BBBY Insiders already sold off like a massive amount of their shareholdings during like the stock buyback period. So, a lot of them are buying like again or have bought more, but like most of them got rid of their stock. If you look at their holdings, they don't fucking have much. I don't think so. Pop them off. When is the best time to sell cover calls during Opex? At the peak of the run? Paris? Thoughts on GME September 16 calls at 40 for Opex on GME? Not terrible. Okay, answered Sabres. I bought a bunch of shares of Party in case it runs up during the holiday season. If I bought in at 1, I would have doubled my money. Now it's at 2. Daily chart on it has big run ups and downs. Yeah, they tend to be seasonal, so they'll run in advance of like Halloween. It's not a terrible time to buy it. I just don't think it's gonna like squeeze or anything. A few people in here traded it last year, for like that October period. Is the software that you can use for practice on paper trading? Most brokerages have like a paper trading platform. Thinkorswim's generally considered one of the better ones. Well, I don't like general rules of thumb, but sure. I think that leads to setting hard, fast rules like that in the market leads to making a lot of mistakes. Yeah, still bullish on Rev. If buying into Bobby leaps for exposure, now that the price has been lowered, should we be buying lower strike leaps? I use 40s instead of 80s. What Vega is best? Well, higher is better. Although IV is still very, very high on Bobby leaps, Christine. So I'd be wary of buying those currently, because IV that high is more likely to go down than it is to go up. Did I miss anything about Root? No, I don't think Root's really that great of a play. It's got like 9% short interest, and meh. If insiders start to sell out, it may run, but it doesn't have a lot of short interest. I mean, you want to sell CSPs on a sharp drop with higher IV, ideally. Same way you would sell CC is just opposite, right? If you're doing it to just profit. I didn't tag you. Can you look at Silver Lake Capital, SI? Bearish. Descending wedge, but this is going to fall back down. If you're looking for an entry, I would look at like sub 50. Bounces back, retests at 95. Not a lot of price history on this. I would maybe like look to like if you're looking to DCA, like DCA in and like start DCAing in the $78 range, but very minimally because there's a lot of downside here. It tends to fully drop to the downside of this, so and it is starting to consolidate after this most recent run, which was on the back of their better than expected earnings. So I would say, yeah, 78 to 70 is where I would start looking to DCA into a position. Regards, Kiki. Do you think? Scale of 1 to 10, what do you give Better Call Saul? 8. Do you think the economy is taking a downturn under alter counts relatively predictable ups and downs? No. The market's taken several downturns during the period that I've traded it. You might want to wait for things to settle down. Bones. Bungusman Johnson, thank you so much, man. Welcome to Cornishon. Thanks, Bean. We didn't really run hard on GME last week. We had some volatility spikes, but our last like real upside was the ETF FTDs. These were both pretty minimal. I don't think they'll affect any run moving forward. Median price target for GME this week. It could move back to like 38, 40. Gamma Max is at like 45 right now. So that's what you should be considering. So somewhere between 38 and 45. If we get a very volumetric uptrend and break Gamma Max, that's kind of a different story. Then 10 to 12% above. Can owners buy and hold shares ahead of time and then just use the shares they already own to cover? Sure. Didn't you mention since we ran hard, blah, blah, blah. Position size. Be this. Are you buying Tesla calls into the split? No, I'm going to stay the fuck away from it. RC's next tweet: billionaires profiting on the back of the regular people should be stopped. Can they sell those rev shares earlier as a 10-day minimum? Which rev shares? I'm getting asked a lot of questions that don't make any fucking sense today. Which rev shares? Thanks for educating us, poors. See you tomorrow. No problem, Edward. Hey, buckled up, Jen. What price would you considering buying more Rev Jan 35s? I have these pretty high. Do you think they'll go back to around $1? Not in the next few days. The warrant shares? The fucking warrant shares are at $30. And it has to be above $30 for 10 days. Otherwise, they're not active until 2024, right? Like they're completely irrelevant unless we stay above $30 for 10 days. In which case, I'd already be rich, so I don't think I care so much about them. It's only like 2.5 million shares. It's really small. Yeah, it has to be above 30 for 10 days. Otherwise they're not exercisable until I believe it's 2024 or 2023. It's like it's not this year. How many Tesla shares do you have? 350. Better to buy pre or post split? Historically post. Ugh, sick, and I've been doing this too long already. All right, well, I hope I got to everyone's questions. If I didn't, and you still have some questions, feel free to DM me over on the Discord. I'll try to get to you by the end of today. Pickles picks will be out tonight at probably like 10 to 12:30ish. And I will see you guys all tomorrow morning. Thank you so much for tuning in. I'll see you guys later. Have a good one.